Hi, this is Dipen Shah, the Senior Vice President with the PCG Research Team at Kotak Securities. Talking about markets, markets have been pretty volatile in a tight range over the past couple of weeks, and this is on the back of several events and news which have come up both on the domestic front as well as on the global front. We have seen that the news have been both positive and negative. On the positive side, we have had the Greek elections which actually had a positive outcome as compared to what the markets had thought. And also in the US, we have seen that the Federal Reserve has recently prolonged, or it has kind of extended the Operation Twist with a view to keep the interest rates at the longer end low. On the negative side, we have had the RBI which has not acted on the rates or on the liquidity front in the recently concluded policy meet, and this is as compared to expectations of some reduction which is happening or some reduction happening. Also on the monsoon front, we have seen that the monsoon has not progressed along expected lines. So amid these positive and negative factors, markets have largely remained range bound. What we have seen is that on the global front, things are looking slightly better, especially in Europe where Greece has kind of been solved, the issue of Greece has been solved, and the political leadership stands awake to act against any untoward incident. In US also, expectations are that there could be some quantitative easing if things turn really bad. On the domestic front, yes, the reforms are expected to happen. There has been some delay in the reforms, but we are optimistic that the reform process will be initiated, largely because of the fact that we believe that this is the best period for the government to start acting on some of the reforms, and once when that start happening, we can see that the market should start moving up. On the RBI front, the RBI has indicated that it will await reforms from the government front to act on interest rates, and once when the reform initiatives are taken up, we can also start seeing some moderation in the interest rates. So over the next 1 month or so, over the next few weeks, we will await further action on the policy initiative side, and we believe that will be a prerequisite for the markets to start moving up post some stabilization. Till the time it happens, we expect the markets to trade in a narrow band and will be continued to be influenced by the global factors. And globally, we have got Spain, which will be up next when it comes up with its requirement of funds, and also we have got the Eurozone leaders meeting up towards the end of June. So markets will continue to react to them, but we can start seeing a sustainable improvement or rise in the markets once when we start seeing the reform initiatives taken up. On the strategy side, we continue to maintain our bottoms up approach. We believe that's the best approach in the current scenario, but within that we will prefer stocks in sectors like banking, in IT. We continue to like selected stocks in media and in the logistics front also. Once when we start seeing more policy action, we will become more positive on the economy dependent sectors like capital goods, infrastructure and the rest. Thank you very much.